The dollar system as we know it is collapsing. Not tomorrow, not next year. It's happening right now, in real time, and most people have no idea what's coming next. Central banks around the world are making a historic shift. They're dumping dollars and accumulating gold at a pace we haven't seen in over half a century. The numbers are staggering. We're talking about the largest coordinated movement away from the dollar in modern history. And here's what nobody's talking about. This isn't just about economics. This is about power. This is about which nations will control the global financial system for the next 100 years. And the United States is losing that battle. Let me show you exactly what's happening behind closed doors. Gold just hit over 50 all-time highs this year. Think about that for a second. 50 times, gold broke through to new record territory. That's not normal market behavior. That's not speculation. That's institutional panic buying on a scale that should terrify anyone holding significant dollar-denominated assets. The price has more than doubled in less than 2 years. We're now seeing gold trade above $4,000 per ounce. Financial institutions that spent decades dismissing gold as a barbarous relic are now scrambling to acquire physical metal. Morgan Stanley, one of the most conservative voices on Wall Street, is openly discussing a sustained bull market driven by central bank buying and the decline of dollar dominance. But here's where it gets really interesting. This isn't retail investors driving these prices. This isn't some Reddit forum pumping a commodity. This is central banks, sovereign wealth funds, and institutional players with trillion-dollar balance sheets making calculated moves to protect themselves from what they see coming. The World Bank just released data showing that gold, silver, and platinum prices have all surged as investors flee to safe assets. They're using words like geopolitical tensions and economic uncertainty. That's central bank speak for the system is breaking and we need hard assets. Let me paint you a picture of what's really happening in the global financial system right now. China has been systematically reducing its dollar reserves for years. They're not making headlines about it. They're not announcing it on CNBC. They're quietly, methodically converting dollars into gold, commodities, and strategic assets. Their official gold reserves have been climbing month after month, but here's the thing. Nobody believes those official numbers. Industry insiders estimate China's actual gold holdings could be 3 to 5 times higher than what they report. Why would they hide it? Because if the world knew how much gold China was actually accumulating, it would trigger a panic. Other nations would rush to do the same. The dollar would collapse overnight. Russia made their move years ago. After Western sanctions hit them, they went all in on gold. They dumped nearly all their U.S. Treasury holdings and converted everything into physical gold and other hard assets. They learned a brutal lesson. If you hold your wealth in someone else's currency, they can freeze it, seize it, or devalue it whenever they want. Now look at what's happening with BRICS nations: Brazil, Russia, India, China, South Africa, and now dozens of other countries joining or seeking membership. They're building an alternative financial system. They're creating mechanisms to trade in their own currencies. They're establishing gold-backed settlement systems. This isn't theory. This isn't conspiracy. This is documented policy from these governments. The BRICS nations represent nearly half the world's population and a massive chunk of global GDP. When they move away from the dollar, when they start settling trade in yuan, rubles, and gold, the demand for dollars collapses. And when demand for dollars collapses, so does its value. Here's what that means for you. Every dollar you have saved, every dollar in your retirement account, every dollar in your bank account is losing purchasing power. Not slowly, rapidly. The official inflation numbers are a joke. Anyone who buys groceries, pays rent, or fills up their gas tank knows the real inflation rate is far higher than what the government reports. Gold isn't going up because gold is becoming more valuable. Gold is going up because the dollar is becoming less valuable. Gold is simply maintaining its purchasing power while paper currencies disintegrate. Let me take you back to 1971. President Nixon closed the gold window. He ended the Bretton Woods system. He severed the last link between the dollar and gold. At that moment, the dollar became a pure fiat currency, backed by nothing but faith in the U.S. government. For a while, that faith held. The U.S. was the dominant military power, the dominant economic power. Everyone needed dollars to buy oil. The petrodollar system kept demand for dollars artificially high. But that system is dying. Saudi Arabia, the cornerstone of the petrodollar system, is now accepting yuan for oil sales to China. They're in talks with other nations about diversifying away from dollar-only oil sales. When the petrodollar dies, and it is dying, the primary source of artificial dollar demand disappears. Think about what happens next. Trillions of dollars held overseas by foreign governments and institutions will come flooding back to the United States. That's not a good thing. That's hyperinflation. That's Weimar Germany. That's Zimbabwe. That's Venezuela. The Federal Reserve knows this. They're trapped. If they raise interest rates to fight inflation, they collapse the economy, and the government can't service its debt. If they keep rates low and print more money, they accelerate the dollar's decline, and inflation spirals out of control. There's no good option. They're managing a controlled demolition, trying to prevent a complete collapse while the system transitions to something new. And what's that something new? A multipolar world where gold plays a central role in international settlement, where currencies are backed by commodities and hard assets instead of government promises, where the United States no longer has the exorbitant privilege of printing the world's reserve currency. Now, if you're sitting on $100,000 or more in retirement accounts, you need to understand something critical. There are ways to protect yourself. There are ways to get physical gold into your retirement account without triggering tax penalties. I put together a free guide that covers exactly how gold IRAs work, what the rules are, and how to set one up properly. It's in the description below. If that's relevant to your situation, it's worth checking out. All right, back to where this is all heading. The commercial banks are in trouble. Deep trouble. They're sitting on massive unrealized losses in their bond portfolios. When interest rates went up, the value of all those bonds they bought during the zero-rate era collapsed. Silicon Valley Bank failed because of this. First Republic failed because of this. How many more regional banks are sitting on similar time bombs? The FDIC insurance fund doesn't have nearly enough money to cover a systemic banking crisis. If multiple large banks fail simultaneously, the government will have to print trillions to bail them out. More printing means more inflation means more dollar devaluation. Smart money sees this coming. That's why they're buying gold. That's why gold keeps hitting new all-time highs even as stock markets wobble and real estate softens. Gold is the ultimate safe haven. It's been money for 5,000 years. It's survived every empire, every currency collapse, every financial crisis in human history. When everything else fails, gold endures. But here's what most people don't understand about the gold market. The price you see quoted, that spot price, that's largely determined by paper gold trading on the COMEX and LBMA. Futures contracts, ETFs, derivatives. Most of that gold doesn't physically exist. It's just paper claims on gold. The ratio of paper gold to physical gold is estimated to be somewhere between 100 to 1 and 250 to 1. That means for every ounce of physical gold that actually exists in vaults, there are 100 to 250 paper claims on that same ounce. What happens when people start demanding physical delivery? What happens when the paper gold market breaks and people realize there isn't enough physical metal to satisfy all those claims? We've already seen cracks forming. Premiums on physical gold coins and bars have been elevated for years. Delivery delays are common. Some dealers are struggling to source inventory. The spread between paper gold prices and physical gold prices is widening. When that system breaks, when the paper gold market collapses and price discovery shifts to the physical market, we're going to see a price reset that will shock the world. Some analysts are predicting gold could hit $10,000, $15,000, even $20,000 per ounce in a true physical shortage scenario. Is that guaranteed? No. But the risk is real. The structural problems in the gold market are real. The disconnect between paper and physical is real. And the central banks know it. That's why they're not buying gold ETFs. They're not buying futures contracts. They're demanding physical delivery. They're repatriating their gold from foreign vaults. Germany spent years bringing their gold back from New York and Paris. The Netherlands did the same. Austria, Belgium, and others have followed. Why? Because they don't trust the system anymore. They want their gold in their own vaults, under their own control, where it can't be frozen, seized, or hypothecated. Let's talk about what happened in 2008, the financial crisis. Lehman Brothers collapsed. Bear Stearns collapsed. AIG needed a government bailout. The entire global financial system was hours away from complete meltdown. What did gold do? It initially dropped as everything sold off in a liquidity panic, but then it rallied hard. From 2008 to 2011, gold went from around $800 to over $1,900. It more than doubled while stocks struggled to recover. Why? Because people lost faith in the financial system. They lost faith in banks. They lost faith in government promises. They wanted something real, something tangible, something that couldn't be printed or manipulated. We're heading into a crisis that will make 2008 look like a minor correction. The debt levels are higher. The derivatives exposure is higher. The systemic risks are higher. And this time, central banks have already used all their ammunition. Interest rates were already at zero. They already did massive quantitative easing. They already expanded their balance sheets to unprecedented levels. What tools do they have left? More printing, more debt, more debasement of the currency. And that's exactly what gold protects against. Here's something else nobody's talking about. The mining supply of gold is declining. The easy gold has been found. The high-grade deposits have been mined. What's left requires more energy, more capital, more time to extract. And with energy costs rising, environmental regulations tightening, and political instability in many mining regions, bringing new gold supply online is becoming increasingly difficult and expensive. Meanwhile, demand is exploding. Central banks are buying. Institutional investors are buying. Wealthy individuals are buying. Emerging market consumers in China and India, where gold has deep cultural significance, are buying. Supply down, demand up. That's the simplest, most fundamental driver of price in any market. The gold-to-silver ratio is another fascinating indicator. Historically, this ratio has averaged around 15-1, meaning 15 ounces of silver equal 1 ounce of gold. Right now, that ratio is much higher, suggesting silver is dramatically undervalued relative to gold. Silver has all the same monetary properties as gold, plus it has massive industrial demand. It's used in solar panels, electronics, electric vehicles, medical applications. As the world electrifies and technology advances, industrial silver demand is soaring. But here's the kicker. Silver is even more scarce than gold in terms of above-ground refined supply. Most silver is consumed in industrial applications and never recovered. Gold, on the other hand, is almost never consumed. It's hoarded, recycled, and preserved. If gold goes to $10,000, where does silver go? If the historical ratio reasserts itself, silver could hit $600, $700, even $1,000 per ounce. That's not a prediction. That's just math based on historical relationships. The point is, precious metals are waking up. The decades-long suppression is ending. The manipulation is becoming impossible to maintain as physical demand overwhelms paper market games. Let me tell you about what's happening in the derivatives market. The big banks have massive short positions in gold and silver. They've been using these positions to suppress prices for years, protecting the dollar's status by making gold look weak. But those short positions are now underwater, massively underwater. As prices rise, these banks face enormous losses. At some point, they'll have to cover those shorts, buying back the contracts they sold. That buying will push prices even higher, forcing more short covering, creating a feedback loop. It's called a short squeeze, and when it happens in the gold market, it's going to be spectacular. We saw a preview of this in 2011 when gold briefly touched $1,900. The banks panicked. They orchestrated a massive takedown, smashing the price back below $1,300 over the next few years. They needed to shake out the weak hands, restore confidence in the dollar, and buy themselves more time. But they can't do that anymore. The fundamentals have changed. The geopolitical landscape has changed. The level of global debt has changed. Central banks are now on the buy side, not the sell side. There's no cavalry coming to save the dollar this time. China and Russia have been preparing for this moment for over a decade. They've been accumulating gold, they've been building alternative payment systems, they've been reducing their dependence on Western financial infrastructure, they've been creating bilateral trade agreements that bypass the dollar entirely. The Shanghai Gold Exchange now rivals the LBMA in terms of trading volume. China has created a yuan-denominated gold contract that allows oil producers to sell oil for yuan and immediately convert those yuan into gold. It's a direct challenge to the petrodollar system. This isn't happening in some distant future. This is happening now. The infrastructure is built. The relationships are established. The alternative system is operational. All that's left is for more countries to start using it. And they are. Slowly at first, then all at once. When the dam breaks, when the dollar's reserve status is officially challenged by a credible alternative, the repricing will be violent. Currencies will collapse. Asset prices will swing wildly. Wealth will be destroyed and transferred on a scale we haven't seen since World War II. But gold will hold its value. Gold will do what it's always done. It will preserve purchasing power through the chaos. Think about your retirement. Think about your savings. Think about your family's financial security. Are you positioned for what's coming? Or are you hoping the system holds together just a little bit longer? Hope is not a strategy. The warning signs are everywhere. Record gold prices, central bank buying at historic levels, geopolitical tensions escalating, debt spiraling out of control, inflation eating away at purchasing power, banking system instability, currency wars intensifying. This isn't fear-mongering. This is pattern recognition. This is understanding history. This is connecting the dots that mainstream financial media refuses to connect because their advertisers and sponsors benefit from keeping you in the dark. The wealthy know what's happening. The ultra-rich are moving their assets. Family offices are increasing their gold allocations. Billionaires are buying farmland, precious metals, and hard assets. They're not doing this because they're paranoid. They're doing this because they have access to information and analysis that the average person doesn't. But you don't need to be a billionaire to protect yourself. You don't need insider connections. You just need to pay attention to what's actually happening instead of what you're being told is happening. Gold has been the ultimate form of money for thousands of years. It's been the foundation of monetary systems throughout human civilization. Every attempt to replace it with paper has eventually failed. The dollar will be no different. The only question is timing. How long can they keep this going? How long can they paper over the cracks? How long can they maintain the illusion of stability? Nobody knows for certain. But the longer they delay the inevitable, the more severe the correction will be when it finally comes. The smart move is to position yourself now, while you still can, while gold is still available at these prices, before the masses wake up and demand overwhelmed supply. Because when this really gets going, when the panic sets in, you won't be able to find physical gold at any price. Dealers will be sold out. Premiums will be astronomical. Delivery times will be measured in months, not days. We've seen this before in smaller crises. In 2008, gold dealers were completely cleaned out. Premiums on coins went to 50, 60, even 70% over spot. People were desperate to get their hands on physical metal, and there simply wasn't enough to go around. Now imagine that on a global scale. Imagine that lasting not for weeks, but for years. Imagine that happening while the dollar is actively collapsing and people are watching their savings evaporate in real time. That's the scenario we're heading toward. That's what the central banks are preparing for. That's why they're buying gold like there's no tomorrow. The transition away from dollar dominance is the biggest financial story of our lifetime. It's bigger than the dot-com crash. It's bigger than the housing crisis. It's bigger than anything we've experienced in the modern era. And it's happening right now, whether you're paying attention or not. The gold standard isn't coming back in the traditional sense. We're not going back to the classical gold standard where currencies are directly convertible to gold at fixed rates. But we are moving toward a system where gold plays a much larger role in international settlement, where currencies are at least partially backed by gold reserves, where gold is once again recognized as the ultimate form of money. Central banks are voting with their actions. They're telling you what they think is coming. They're showing you where they're putting their trust. The question is, are you listening? Are you watching what they do instead of what they say? Because what they're doing is clear. They're abandoning the dollar. They're accumulating gold. They're preparing for a new monetary system. And if you're not doing the same, you're going to be on the wrong side of the greatest wealth transfer in history. The dollar is dead. Long live the gold standard.